Hi, this is Mark. Just before we go into the analysis for the week commencing the 26th of May, I want to recap on what happened last week. I was explaining in my write-up in the video how I chose the Euro-Yen over the other two because it was a stronger area of support and resistance, and I explained that I was looking for a pullback at 131, and this was after the market close on Friday night. What happened at the market open? We had a gap and a big drop all the way down, and what did it do? Fingers in the fire, touched 131 and promptly bounced away. This was more than a week's target before Monday was finished, and I have explained in the gaps video before. Go back and look at it. But what I do when I look at the gaps, I look for my main areas of support and resistance as per my Sunday analysis, and if we get a gap down to those areas, then I will take the trade. During the week I showed you the importance of a triangle breakout. This is the euro pound. Initially I was looking for a short at 8,500, which I took and lost, but I explained that this triangle pattern here suggests we have a potential move of 500 plus pips. And what happens with the triangle, as price nears the point of the triangle, it's almost like a spring coiling tighter and tighter and tighter. And the theory goes that when price gets nearer to the point, it will burst out of an area. Now, it has set off. I actually took the trade at 85.20, and the reason being in recent weeks that has been my stop for all these shorts that we had. So it wasn't just a break of 8,500, I was interested at 85.20. This is the British pound, and I showed you last week how we were in a clear 4-hour down channel and how price was hopefully going to pull back to 85.30 area. I explained it was 50% fib, and it was the then current trend line. Now I have since moved this trend line, and we'll look at that in more detail for the week ahead. But what happened? Price came up, it hit and stopped 852.30 almost to the pip. I had my stop above the 78.6 fib, and there was some EMAs on a 4-hour chart, and we had then a 200 and odd pip drop. And where did it stop? Bounce off almost to the pip at 150, a logical area where price was going to turn, and price started to turn on lots of pairs. The fact that price started to turn on lots of pairs gave me more confidence to take along on the Aussie dollar weekly chart, as I showed you last Sunday. I explained this wasn't for beginners, but the reason why at 9600 was very interesting for a potential bounce trade is April, May 2012, August 2011, September and May 2010, price repeatedly bounced off this major area of support and resistance. What gave me further confidence was this is gold on a weekly chart. I'd also explained how we had a major support and resistance line for gold, and the Aussie dollar and gold are related. And similarly with silver, at one point this was a pin bar reversal candle last week. Silver came down and was trying to break a major area, and it started to turn. This then was silver on a daily chart, and as you can see clearly, Monday's was a pin bar reversal candle, so it looked as though we were rejecting, failing to break below there, and it did hold the rest of the week. Similarly with gold, Monday's candle came down, touched almost to the pip to the area and moved away. And therefore for the Aussie dollar, when the Aussie dollar came down the first time to 9600 and gold and silver were turning back up, the dollar Swissy was turning back down, as was the dollar yen, as was the CAD. There was general dollar weakness all around, and therefore risky, but the beauty is it was low risk because you only needed a very small stop and therefore a small bounce to be in profit. And as it was, this pair moved almost 200 pips on Thursday, so an excellent trade, as I said at the time, not one for the newbie. I also showed you last week and explained about head and shoulders patterns. We are still looking for a break and close below 12800 for a pullback. And I also showed you how we'd already had an inverse head and shoulders pattern break on the Swissy. This is a weekly Swissy, left shoulder, head, right shoulder, neckline I have in place here. And what did it do? Well, 2 weeks ago price clearly broke through the neckline. It's finally pulled back now to the line, and I will go into detail in a moment on how we play it for the week ahead. But the theory again goes that you measure from the neckline to the head of around 200 and odd pips should be reflected in the move up. You could say we've already had the move, but this was a break of a major trend line, and it also happens to be an intersection of 9600, so a number of reasons why that was of interest and continues to be so. Finally, the euro. We were down here last week. We got a major pullback on the Wednesday after some news. Where did it stop? Logically 130, and it did it again on Friday, and I know quite a lot of you caught at least part of this, and there was a good 100 plus pips in this move as well. On to this week's analysis. This then is the Euro USD on a monthly chart. The monthly candle, of course, is not valid until it closes at the end of this week, being the end of the month. But we have a trend line in place here on the monthly, and the significant area for this trend line is around 12800, and therefore 12800 is significant. If we look on a weekly, spookily, 12800 also happens to be the intersection of the neckline for the head and shoulders pattern I showed you last week. So this area for me is crucial. Now the thing is, this could be construed an inside bar as a bullish sign, and we could be on for a run back up. But unless or until this shoulder breaks above the head, it is still valid. And therefore the more conservative amongst you will wait for a break and a close below here, then a pullback with a view to a fall, and the fall could be, as I showed you during the week, 700 pips here, which will take you down around 120, 120, 100 and the recent low back in July of last year. So a highly significant area. That is my preferred trade of the week if we get a break and close below there. The other obvious one to look at is 130, and we'll have a look on a daily chart. Last week twice this was the FOMC news, spiked and raced up the price, but where did it stop? Well, if it was going to stop anywhere, logically 130 was the zone, and it did it again on Friday, and therefore this is proving to be a major area of support and resistance. It is also a 50% fib on a daily chart, and these EMAs are rolling over, and you also have the weekly 55 just above, and therefore you could be very conservative with your stop just above the weekly the weekly 55 EMA on all this lot, and the fib and the 61.8. So there's loads of things going on here. If the euro is going to turn back down again, then that would be the preferred area, and it may be again we're simply going to bounce along, but that is the main area for me. If price was to break and close above 130 later in the week, I would need it to close above this 61.8 fib before getting involved for longs. Same pair on a 4-hour chart. We were in a clear downtrend, and then it has broken. See where price stopped last week? Well, 78.6 fib again. It could be, as I just said, we could be on for a bounce around the bounce along here. 130 my preferred area to short. British pound on a monthly. This candle has not closed yet, so it's not fully valid, but the major area, if you want to be conservative on this pair, then I will be looking to short at 153.30, as this was huge major previous support and resistance on a monthly chart. So that for me is the significant area. However, if we go down to a weekly, we are coming down to a weekly trend line which is around the all-important, hugely significant 150 area. Remember, I talked about major areas the previous week about when I talked about parity. If price breaks and closes below 150, then we will be looking for a breakout, followed by a pullback for a short on this pair. Same pair here on the daily. So 153.30 I just showed you, also happens to be a daily 50% fib, and the EMA is rolling over, etc. So I said that will be my preferred area to short on this pair, but I would also be interested to short if we break and close below 150. Final option for the more adventurous amongst you, half stake, counter trend, longs back up at 150 because of the fact it is such a huge area. Same pair on a 4-hour chart, and I showed you last week how we'd fibbed the recent move. I have now moved this trend line to accommodate the new move, but it is a clear downtrend that we are still in, and therefore we move our fibs down to the next highs and lows, And here, the intersection, we've got 38.2. It's not the strongest fib in the area for me. If I'm going to take a short from a current position, I would look for a break and close below 150, 100. Your problem here, you haven't got much room to fall particularly. It's just a bit wishy-washy for me, guys. I like to have multiple reasons for a trade. This then is the euro pound, and I showed you earlier how we'd had a breakout of a major triangle on this pair on the daily. If you missed it last week, then once again, major area of previous support and resistance, 8,500. In recent weeks, we've had a handful of decent winning shorts from this position. Now that it has broken and closed above, we start to think in terms of longs. I longed the other day 85.20, so anywhere 85.20, 85.10, be interested for a long. It could, by according to the theory, go many hundreds of pips here. An added confluence point is the daily 55 just below, so you don't need a particularly big stop on this pair. And if we fib it, you also have 84.98 is 50% fib and 61.8 just below. So I say it is a potential decent risk reward here, and I like the fact that there are lots of things going on, and as you know, we're looking for multiple reasons all the time for why we want to take a trade. Final option on this pair, the whole numbers are very important on euro pound. It seems to stop each time at the numbers. 8600 coming up was a previous major support and resistance. Swing traders, it's not really my bag, but 78.6 of a recent daily move. Be watching on a 4-hour for potential touch with a view to a move back down. This is that Swissy. Well, the Swissy, technically we have broken the neckline of the inverse head and shoulders pattern. We are now back down at 9600. I'm going to watch this at the market open. If we don't get any major surprises or drops, I will be interested to long this pair. The thing that makes me wary is we've just had a 5-8 cross. We had a clear rejection up at this upper area, and when everything started to turn down against the dollar, it said 5-8 cross, stochastics rolling over, little bit of MACD divergence. So it could be on for a bigger drop, of course. If it does and it breaks for this trade and we get general dollar weakness, I will be interested down here around 9400 before entering another long. Aussie dollar on a weekly. I showed you in the preamble to this week's analysis how important this area has been on numerous occasions. The thing I liked about this last week, as I showed you, was the fact that everything was turning against the dollar, but it's still a major line in the sand. And therefore, you could be looking for a potential fingers in the fire, price touches it and bounces away once again, or 9600 being this crucial area. You wait for a break and a close and a pullback with a view to a short. But that is the main area for me on this pair. We go back to the daily. If we get a sudden big pullback, then the major area is clearly parity once again. But also notice how this 200 weekly EMA has been important in the last week or so. Price repeatedly tried to break it, and therefore it is now resistance. So there are multiple opportunities on this pair. Bounce back up, break and close below, pull back short, pull back short. This one I would only look at on a 4-hour or daily chart. I would not look on anything smaller. Also, I showed you how to look at gold. The Australians are big producers of gold and other minerals and a big supplier to China. And although the correlation these days is not as strong as it used to be, it is a significant area that we were at with gold. So as I said to you last week, price had already come down on gold and reacted, and silver, and therefore to me that was a clue that the Aussie dollar was going to do the same, and then the fact that everything else was turning against the dollar. So watch gold, watch silver. If they plummet, then I would be less likely to take a bounce back up on the Aussie dollar, and would be thinking more in terms of waiting for a break and close below that 9600 level I just shown you. So this is key, this is a crucial one for me. CAD, same as last week. I am not a great fan of the CAD, and at the moment it's particularly nasty, and what's nasty are these spikes. These spikes are going hundreds of pips, so a lot of people might have been interested here for a counter trend short as it was a double top, but 50-60 odd nasty spike that way, and then later we also had another 50-60 pip spike in the other direction. So for me it's messy. I tend to only concentrate on the CAD when we're back down around parity. I I've shown you in previous weeks how we were looking to long at 100.20, and that one is still 300 pips in profit on the balance. Come on to the yens now. Now the yens, we've had major growth in the yens going back a good few months. We've had signs on the yens that things were going to stall, and what did price do? Price on the dollar yen on the daily stopped, slammed into the monthly 200, and remember the end of this week the monthly candle will close, and if it closes below here, that's a rejection. We've had a 5-8 cross, we've had a trend line break, we've got MACD divergence and stochastics rolling over. So there are a lot of clues here. We could be on for a big pullback. I will be interested on this pair around 100 again, but I would only trade this on closed 4-hour candles. I wouldn't even look for this fingers in the fire, because it's just the danger is that these yens are going to pull back and correct sharply before then continuing on their merry way. Equally, the Aussie dollar yen, I explained last week why I didn't fancy this one, because of the fact that it's made up of the two pairs, and therefore if the Aussie dollar's tumbling or even just rolling down and the dollar yen turns, then it doubles the movement on this pair. So I'm going to leave this alone. And finally, the euro yen. Euro yen, last week I shown you how market opened. Thank you very much. It came down 200 odd pips from one simple move. You then on Wednesday had a clear pin bar reversal, sign that it was going back down. We've had a 5-8 cross, again stochastics and again MACD divergence. 131 is key on this pair. This was a nasty spike later on Friday. I don't like this now. I'm going to wait and see with the yens what happens. I don't trade them all the time, and I just have a gut feeling at the moment we could be on for some steeper pullbacks. Okay, that's my analysis for the week ahead. Have a good one. As ever, check your calendars and be extra careful on Monday because it's a bank holiday in the US and in the UK. Have a good week.